Hello and welcome to today's 5 at 5 show, which today is sponsored by Aurelius Minerals, Silver One Resources and Metallum, and it's brought to you in association with the Resource Global Network. The 5 at 5 forms part of our Minds and Money Online Global June event, running the 22nd to the 24th of June, for which we'd like to thank our lead sponsor, Trade and Investment Queensland. For those who are attending the show for the first time, the aim of 5 at 5, 5 guests at 5 p.m, is to maintain engagement between investors and miners through a lively, interactive format whilst we wait the return of physical events. If you have any announcements before we start, to make the session as interactive as possible, please have your video switched on. To ask a question, you have two options. You can either submit them via the chat function, which is at the bottom of the screen, or you can also go and click on the participants button. I can go and unmute you, and you can go and ask your question live. For today's show, we have a great lineup of guests. They are Mark Ashcroft, President and Chief Executive Officer of Aurelius Minerals, Greg Crowe, President and Chief Executive Officer of Silver One Resources, Kerem, Usenmez, President and Chief Executive Officer of Metallum, Michael Danov, President and Chief Investment Officer of SBP Management, and Angelos, Damaskos, Chief Executive Officer of SBP Management. I'd like to go. Hey.
Sector investment managers.
Okay, sorry, sector investment managers. Sorry, maybe it was a vodka I was drinking rather than sort of water, Angelos. So, Angelos, I'd like to start with you. As I've already mentioned, that you are Chief Executive Officer of Sector Investment Managers. You set the company up in 2004 as a specialist in early stage development situations. What news story this week in mining has caught your eye?
Well, Andrew, thank you for inviting me, first of all, to the show. We have seen many stories, particularly relating to mining recently, but I think what caught my eye is the severe and quite strict clampdown that China is introducing on cryptocurrencies. And in particular, I read that they are closing down cryptocurrency miners in China because they use so much electricity and so much power. And why this is relevant to mining, I think, is because there has been so much talk and speculation about cryptocurrencies being the modern alternative safe haven asset and a competitor to gold. And perhaps people think that it might have diverted a lot of capital, a lot of investment capital from precious metals into the cryptocurrency world. And I have long argued and maintained that the biggest threat to cryptocurrencies is regulation. And it's not only China that is clamping down. We have heard stories about the US authorities being much more strict and examining ways to control how people declare their activities in cryptocurrency investments and whether they file the proper tax returns, etc. We have seen also some huge corrections in the market values of cryptocurrencies, not only Bitcoin, but many of the other leading cryptocurrencies. And I think it's about time for this sort of bubble in my book to deflate and people come back to reality and realize that any asset with such huge volatility and unpredictability in price direction cannot be, in any shape or form, considered a safe haven asset.
Do you usually go and invest in cryptocurrencies yourself?
No, I have never invested a single penny in cryptocurrencies, unfortunately.
When you say like unfortunately, does that mean that you kind of like regret sort of doing it, or you sort of like wish that you can just in times past?
Some people I know were early investors in a cryptocurrency like Bitcoin, but only as a punt, where people say put £1,000 in Bitcoin maybe 10 or 20 years ago, and they have seen this multiply by huge rates. So over a long period of time, it has paid off. But I think the asset class is so unpredictable and so volatile and not correlated to any economic or fundamental events in the modern economy. So I'm a value investor in my thinking and my approach on everything in life. So I shy away from these things.
Mm-hmm.
So yes, I regret that, when someone suggested to me 15 years ago to buy some Bitcoin, I didn't do it. But, with hindsight, we all have different opinions.
Yeah, I have a friend in Hong Kong who owns some Bitcoin, but has gone and forgotten the security code. So he obviously has some money locked up safely, unfortunately, far too safely. Turning to Michael Danov, who, just as I mentioned earlier, is President and Chief Investment Officer of SBP Management. He has over 11 years experience in financial services, investment strategy development, positioning, and has had many years experience in the mining industry. If you were to pick on one mining news story that has caught your eye, what would you pick, Michael?
Thank you, Andrew, for having me as always. What I've been following the last few weeks is more on the copper space, see how a lot of the copper players haven't panned out. So I've looked at Freeport and Antofagasta, just the large scale, more on the producer side. From a return perspective, I'm sure a lot of people here on this call have seen copper rise, and obviously that's been a great inflection point for a lot of the mining juniors, producers. The question is, have we seen a peak, and has it hit the peak? And we see a little bit sell-off happening right now in that space. And the question is, from a profitability and growth from developers and producers, questions, it's going to be questionable to see how that's going to turn out from a modeling perspective. Also, there's another name called Nordgold. They were planning to go public on London Stock Exchange. It's a Russian company, backed by Russian, and I think they just put on hold the listing, so that'd be interesting to watch from that perspective. And we've been monitoring also quite a bit in the lithium space, and a few names have been getting a little attention to that. It's just the question is execution has to be a key factor in that space as well.
When it comes to the copper companies, you mentioned you're looking at producers like Freeport and Antofagasta. Do you look at kind of any like copper juniors? If so, who?
Yeah.
Okay, good. What sort of like copper juniors have caught your eye, and why?
I mean, there's one particular name that we were investors for quite a bit, a company called Trilogy Metals. It had a nice, good turnaround. We've been involved as investors since 2015. So it's we've seen ups and downs in that company, but overall, as a growth story, it's becoming developed to the next stage. So it's a good model to put on from a junior perspective on the execution side. Of course, there's still a lot of things. They have a partnership with South Kobe 32, with a strategic came in a few years ago. But I think from a growth junior perspective, they were probably our best hit over the last 5 years. So if I take a 5-year period investment, it's about a 400% return. Of course, we sold some out, it's some still cap. So, but on a blended return, I think from a copper junior, that was at the bottom of the market 5 years ago. I think it's not better of a rate return as an investment.
And for like lithium, I'm assuming that you're interested in lithium as part of the whole like electric vehicle green revolution story. Correct. But like why lithium as opposed to cobalt, or as opposed to graphite, or as opposed to nickel?
Yeah, the other cobalt has been interesting, but it's been hard to monetize and monitor that space. And I just don't have expertise in other metals. So lithium's just done well for us through one of our investments in the past. With the lithium, there's still a lot of questions from the production and the tonnage and the control market, and obviously with SQMs of the world behind it. It's been up and down industry overall also last 3 years, so we haven't seen the full inflection point yet. But I think where the EV market is going, and obviously it requires other specialty metals and including base metals and obviously silver, I think that will be even a big factor. But from today, from a production level, from all the producers and the demand supply, I don't think it has met the equilibrium point yet. So I think at some point that will be a breakthrough. But again, there's a lot of concerns from a production level once these things get into it, and also who could scale it first. And from a junior perspective, we've looked at a few of them, have one today, and we know that company will be coming to a point where to make the executive decision to take it to production level, or potentially into sell the company, or whoever else will take over next.
Okay, thank you very much for that. Well, let's move on to our first mining update of the show. So the first mining update is going to be from Mark Ashcroft of Aurelius Minerals. Just while Mark does his screen share and gets his slides up, I'll just give him a little bit of brief plug. He had actually sent me in this very, very nice sort of like bio, but hopefully Mark doesn't mind. I'm going to miss bits out and just say the key thing you need to know about Mark is he was the joint winner in our first mining pitch battle that we had yesterday at our Mines and Money online global junior show. And also really impressive that he started work in the mining industry as an underground miner at the age of 18 years old, which I find incredibly impressive. Had an illustrious career, he's been sort of directors of various mining companies, but I don't really want to eat into your time, Mark. So as you've got your slides up, would you like to give us an update of Aurelius Minerals?
Yeah, sure. Why don't I do that? I'm sort of compress this down, and it's 5 o'clock somewhere, anywhere. So I'll just talk through what we're talking about, and really, the majority of our emphasis is on Nova Scotia. That's our investment thesis. It's certainly an emerging Canadian gold camp. There's significant exploration upside at our advanced assets along the eastern shore. We're only about an hour and a half, from Halifax Airport. Our strategy is modeled on the FNX mining approach, which is to apply capital to underexplored, unloved, and misunderstood assets. We have infrastructure and utilities in place, including a 300-ton per day mill at our Aureus East project, and we do have an existing series of resources across our asset base. Though the interesting thing is we have a permitted gold project in Nova Scotia with a 300-ton per day mill and underground workings, but no current resource. So that's where our work is going now, and that's to produce a systematic and intensive exploration program designed to define a maiden resource in early 2022. We're on that path to production following the FNX model, and our task base is define resources, refine those to reserves, and re-engineer extraction methods and the economics. It's an extensive mineral system between the Aureus East, which is here. That's the mining permit and the mining leased area. And then we have the Aureus West, which is an exploration license. So distinct in the properties, but similar in the structure. And what we've got is a very extensive system. They are typically hinges and limbs where you've had bedding, you've had sediment plains. So like basically ocean floor has been pushed together. And then you've had those voids when they were compressed, fluid came up in there and they filled that with quartz. And these are the hinges, and then you have limbs. Traditionally, these have only been expected to be like 5 to 10 meters long, but we're starting to see them extend quite extensively beyond hundreds of meters. And if we look very expressly over here, we have very high grade contacts of gold occurring in the quartz. Here's an example, 182 grams per ton over 65 centimeters. But we then develop those into a geological zone because we actually have identified gold in all of the sediment rock around this quartz, which was traditionally considered to be barren. So we've really started to define a 14-gram horizon over 9.5 meters. Beside that, 174 grams. But if we go from tip to tail of mineralization, you start to see a geological zone, a targeting zone, of 11 grams over 10 meters. And we've had some pretty extensive successes. Those 4 holes I showed you were sort of on this plane. Then we actually turned the drill around 90 degrees and sort of drilled along the strike. And these images, they're hard for you to see, but these are all, consistent coarse gold. And so we're seeing more homogeneous distribution of coarse gold in certain zones. And these are great examples, photo 1, 50 grams over a 0.8 meter, photo 2, 28 grams over a meter, photo 3, 1.7 meters to 28.8 grams per ton. But it sort of takes away from the historical randomness of the nugget effect when we start seeing more consistent distribution. If we go to the west, this is a much different target. It's in the sense that we've got more units that we're going to look to extract. So this is more of an open pit target. We're seeing those same limbs occur to the south, but they seem to be remnants. The hinges that were attached to them have been worn away, but you can see there's a beautiful shape here for potentially, an open pit target. And you can see the extent of the mineralization that we've seen. Hole 1 was 100 meters of, over a gram. hole 2, 19 meters of 1.15 grams. And we're seeing consistent mineralization in every hole that we've drilled in Nova Scotia to date has hit gold. And that's significant because it just shows, and this is the grade show, just shows that broad mineral system. This is a 1600 meter strike length. It's 100 meters wide, and we've seen mineralization down to a depth of 500 meters. So lots of activity, lots of catalysts and news flow over the next 12 months. We just completed a 12,000 meter drill program, just looking to summarize that and the last assays coming out of that. We're currently drilling our phase 2 program. We're doing 15,000 meters of surface and underground drilling at the east. And then when we're done the surface drilling on the east, we'll move that to the west. And we're doing an aeromag survey across all of our assets. So plenty of news flow, plenty of catalysts, and we're aiming for that resource estimate in early Q1 2022. And, we've got, that's our structure and my contact details. Please go to the website. Feel free to reach out to me if you haven't in the show. And I look forward to taking some questions.
Excellent. Well, thank you very much for that. I'll kind of kick off with the questions before I go to the audience. I mean, the audience, please go and post in the chat box there. I think you did a recent private placement. How did that go? Yeah,
so we raised just over $6 million. It was, very well subscribed. We were sort of aiming for sort of 5, and we were able to do a little bit more. We did a combination of the flow through the Canadian tax incentive shares and hard dollars. So that's those are the funds that we're going to put into our exploration program, and that should hopefully get us there.
Okay. Let me kind of bring in our 2 investor guests. Maybe I can go to Angelos first. What questions or thoughts do you have for Mark?
Yes, thank you, Mark. A question I always like to ask in these past producing projects is what happened in historical context? Why was the mine first shut down and abandoned? Probably the answer is because of low prices prevailing at the time. But then importantly, why was it not picked up in this first bull market we've experienced from 2002 to 2012?
It's a great question because we have asked ourselves that same question. And I think what we've really started to do is with this drilling, every time we put a drill hole in this project, we have identified opportunities. And I think one of the key takeaways for me was in hole number 7 from our underground drill pad. That was our most successful hole in the sense that we intersected 8 discrete horizons. But the one that was most telling to me, Angelos, was 0.5 meter of 21 grams per ton in the floor of the drift of that was actually excavated for the bulk sample. So this never went into full production. It was there as done as a bulk sample. There was only about 22,000 meters of drilling on this project. And we use the expression stope and hope, which means mine it and hope you gather that gold. And what the traditional model was that the gold was randomly hosted in the quartz, in the classic nugget effect. And the prior operators felt that the sediments that where we've identified gold was waste material. So they left a thin skin of material in the floor of the drift to not take any waste material. And we're seeing that consistently in our zone 9, that is actually where we have that coarse gold. So in my humble opinion, they left the gold behind.
Thank you for that. Michael, what questions do you have for Mark?
Yeah, Mark. First question. So with the $6 million you did the capital raise, from an execution perspective, where's the money going to be going on? I assume drilling and a few other expenses. And how much have you guys raised in total since the inception?
So we raised, so we took this project on, we acquired this project at the end of February 2020. That was great timing for COVID because it then hit with all our restrictions, of course. So I'm really quite proud of what my team was able to do. We set up an exploration team remotely, via Zoom. We actually set up drill programs. We were restricted from traveling there. So in July of last year, we raised $4.4 million to advance, to advance the project. We did that at the equivalent of 50 cents and 55 cents. We just did a rollback with this recent financing. And then we used that money to confirm the presence of the high-grade gold mineralization in Nova Scotia. We picked up $1.5 million of flow through in November, a very significant premium at that point at 85 cents equivalent to the rollback. And then we've just recently raised this $6 million to push through. And I think to address what Angelos said and where you're going, I think the complexity of the story is in the simplicity of the answer. I think the gold is still there in the ground because we've hit gold in every drill hole we've hit.
And what was the historical production?
It never hit. It never went into production. It was two bulk samples that really they did build the mill. They built a 300 ton per day mill, and that was in the early 90s. Then that was the depressed period of gold pricing. The next group came in. They did some drilling and then went through with a bulk sample. They came up short as well, mining the straight quartz. And then another group borrowed $5.5 million to do a bulk sample with the assumption that they would repay that debt with the proceeds. And they were unsuccessful. Again, we've surveyed the excavations that were removed. We've taken a look at the historical database of core that we actually found that had never been sampled or assayed. And we've modeled that and our own intercepts, and these intercepts are around the excavation, and the excavation's gone through them. So I really think that's our opportunity.
Got it. And go ahead, Andrew.
No, you go ahead, Marcus. Sorry.
So with the $6 million you raised, that'll give you a run rate of what, 12 months until you have to come back to the market again?
Yeah, no, I don't think we're drilling, we're drilling faster on, so we sort of split it out from our exploration dollars to our SG&A budget. So our drilling should get us through to I would say by the end of this year for our exploration program. And then we would come back for our sort of phase 3 and additional drilling beyond that.
How much are you planning to drill in total, or what do you need to from a budget
we're looking to, well, right now, I think, the sort of phase planning is a function of, what you're finding and where that confidence is. I mean, we're a group of experienced industry people. And so I sort of think our expectation is we're going to do 15,000 meters, give or take, on the east in this current phase, and then 5,000 on the west. We would probably look to do, maybe 20 to 30,000 split between the east and the west on that final phase 3 after we've sort of produced, after we've produced a sort of 43-101 updated resource and PEA. We really want to get the confidence level up so that we can either go to a high level of resource or reserves. Got it.
And if a PEA or 43, when we're looking about 2 years out.
I think we're aiming for a resource update, a maiden resource Q1 2022. So we're talking 7 months, give or take. And then we'll look to do a PEA on that. So I sort of aim for Q3 2022, roughly 3 months after we've established the resource. We're going to continue drilling. That'll give us a further resource update. And our goal is to actually aim for a PFS or feasibility study by Q2 2023, because I talk about that FNX mining study. We have the infrastructure there. We think, from what we're seeing the gold, the mineralization. We're putting it together more consistently than anybody has previously, and there's an opportunity to potentially either restart our own mill or potentially supply ore to Atlantic Gold, which is a 100,000 ounce producer owned by St. Barbara's Mines, who are running into some production forecasts in around the 2023 period, and there's an opportunity there, I believe.
Okay. Well, look,
thank you.
Thank you very much for that, Marcus. Some really, really great questions there. I think in the interest of time, we need to just move on to our next presenter, but I'll definitely come back to you, Mark, later on in the show. Just to briefly introduce our next presenter, whilst he just gets his slides up on the screen. Crowe has over 30 years experience in the exploration and mining sector, extensive exposure to precious and base metal projects throughout North and South America, Asia, and Africa. He is now the president and CEO of Silver One Resources. I think he now has his slides up on the screen. So, Greg, the floor is yours.
Okay, Andrew, thank you very much. I've got a lot of material here, so I'll be speaking fairly rapidly, but just as an introduction, we entered into an agreement with Silver Standard in 2017 with the ability to acquire 100% interest in our flagship property called the past producing Candelaria silver mine in the state of Nevada. And I'll come back to this in a little bit. Important point is the agreement doesn't have any royalties back to Silver Standard. We're also going to be talking about two other projects, exploration level, but very, very highly prospective. One in Eastern Nevada called Cherokee, and another one in Arizona called Phoenix Silver, which is an extremely high-grade opportunity. Just to let people know, we did a financing mid last year, raised 9.5 million Canadian. Of that, Eric Sprott came in for 5 million of the 9.5 million, and that was the third time that he had invested in our company via private placements. So we're concentrating on these three assets in the United States. I'll first talk about Candelaria, jump over quickly to Cherokee, and then to Phoenix Silver. So in essence, Candelaria was a really high-grade past producer. Started in 1864, produced on average 1,250 grams per ton gold from underground mining, converted into open pit. Kinross was the last operator. They shut down in 97 with the collapse of silver prices to under $5 per ounce. Dealt it off to Silver Standard. Silver Standard did some testing, but silver prices were still low. So they moved on to other operations. They were merging with Alisar and rebranding their company. We came along and got a good deal on the acquisition for the 100% interest. Not only did they, Silver Standard, put out a historical resource of about 44 million ounces of silver, measured at indicated, plus 34 million ounces inferred. We have just last year put out an updated resource on the two big heap leach pads, 30 million ounces indicated, another 15 million ounces inferred at an average grade of about 42 grams per ton gold, or silver, I should say. That'd be nice if it was gold. We recently completed a 15,000 meter diamond drilling and reverse circulation program. Interesting enough, we're outlining a fairly high grade interval down dip from one of the two big open pits. This looks like the grades could be amenable to underground mining for future extraction consideration. Values up to 1,700 grams per ton silver with a good gold grade of about a gram and a half gold. And these are over widths that vary between 1.5 meters up to about 12 meters. Not only that, we've got a really good upside potential along strike from the two big open pits. We're looking at releasing the rest of the 15,000 meter drill results coming up in the next few weeks. The idea is to do metallurgical testing on that and the heap leach pads in order to combine those materials for potentially increasing the grade and recoveries. The aim is to put out a updated economic study towards the end of the year. Plus, there are indications on some of the old heap leach pads for a different, on the old adit dumps for a different style of mineralization. We note chalcopyrite rich in an altered intrusive. So is there a porphyry related target underlying that? So we're going to be doing a lot of work. We're going to be doing some more drilling this year. We're putting out our met testing and then potentially an economic study by the end of the year. Now, Cherokee is an earlier stage project. We've discovered strong vein systems over 12 kilometers along strike. There is some porphyry potential at depth. We've done a lot of detailed sampling. Cherokee mine itself has values in the thousands of grams per ton silver and very high copper grades as well. We're going to be moving a drill onto there a little bit later this year and drilling some of the patented claims around Cherokee, but there are some other very interesting targets to develop as well. Now, our third project in Arizona, very high-grade opportunity. In essence, some vein fragments have been found. There's very little outcrop on the property. One vein fragment came in weighing 417 pounds, or just under 200 kilograms. We didn't actually sample that. It's a collector's item, but specific gravity determination suggests there's over 70% silver. And we did assay some of the smaller vein fragments, and we're getting values up to a remarkable 459,000 grams per ton silver, or 14,500 ounces per ton. So we're doing exploration. We have applied for a drill permit. We want to look for the source of these very rich underground silver veins, but we also have some porphyry potential in the south. As a matter of fact, our neighbors have entered into an agreement with South 32 out of Australia, and they're actually drilling for porphyry material as we speak. So here's our basic share structure. We've got between 11 and 12 million still left in our treasury. Eric Sprott, our largest shareholder. We do trade big volumes on both exchanges, and that is the Silver One story.
Okay. Well, I think that I saw in terms of on your shareholder register, I think I saw sector management, which I assume is you, Angelos. Is that
right?
Okay? Wait. Would you like to ask the first question to Greg?
Yes, absolutely. We have been shareholders in Silver One for a couple of years now, so we know the story well, and we appreciate the work that Greg and the team are doing. I just want to clarify in the presentation, obviously, Greg, the company has 3 projects at different stages of development. How do you allocate the work and the capital commitments to each project?
Yes. Well, we do plan on doing programs on each of those 3 projects. Candelaria, we just completed a 15,000 meter reverse circulation in a diamond drilling program. We're going to be doing another 7,500 meter program, plus we are going to be doing a economic study, hopefully by the end of the year. And we are probably allocating about $3 to $4 million to that project. The other 2 projects are earlier stage. We're doing some drilling programs, probably somewhere between 1,500 meters and 2,500 meters on each of those. Each of those programs is somewhere between $600,000 and $700,000 each. And future allocation beyond that will be dependent upon results and how we allocate the rest of our treasury.
Right. Thank you.
Michael?
Greg, thank you for that presentation. When you guys purchased the acquisition of 100% from Silver, what was that amount, or how much have you disclosed that you purchased it for?
Yeah, in essence, the original deal required us to make 4 equal payments of $1 million in Silver One shares. We made 3 of those 4 payments, and then we renegotiated the 4th payment by taking on a historic obligation by Silver Standard back to Kinross to pay $1 million in upon commencement of commercial production. We took that on, we changed the terms a little bit, so we've essentially paid somewhere between $3.25 million in Silver One shares, no cash.
Got it. And from, I guess, to Angelo's question, from putting the capital to work, what do you think which of the asset obviously going to be more advanced and that's going to give the real value, and the other one's going to be on the back burner and essentially provide in the next kind of 2 years? I mean, can you see this going into production, or you would have to sell it to a strategic or major to take over and take it to production?
Well, Candelaria is obviously the most advanced and has had the most work done on it. We're not only by ourselves, but by predecessors as well. The other 2 projects are earlier stage. So Candelaria is front and center. Do we plan to put it on production? That's the path that we are moving towards. Should an opportunity arise where a partner wants to come in and give us a hand, and we think that's beneficial to our shareholders, we'll consider that at the time. But right now we're on the path to production. Now, that said, moving forward on the other 2 projects that, as you said, are on the back burner, well, maybe we'll move them up to the front burner. I mean, if we had some good drill intercepts on our very high-grade Phoenix Silver project, then that may move to a more front burner, shall we say. So time will tell.
Would you ever consider a project outside of the USA? You've currently got projects in Nevada and Arizona. Would you consider outside?
Yeah. Well, we had projects in Mexico originally, which we've sold off for a deal for about 6 million Canadian, roughly, in shares and cash. So we moved away to concentrate just on these more advanced projects in the Southwest US. Would we consider something in another jurisdiction? Possibly. It depends on the quality of the asset, the terms of the deal, etc. But one stipulation that we do have is it has to be a safe jurisdiction with the rule of law.
Define safe.
Safe is well, I could probably define unsafe. I'm not going to I'm not going to Afghanistan or places like that. No, safe jurisdictions are just look at the Fraser Institute in terms of the best mining jurisdictions in the world and follow some of those ones. North America is pretty good. A couple of provinces I'd probably stay away from in Canada, but overall, Canada, US, Australia is good. You know, other places could be of interest as well. A lot of groups are having good luck in Turkey and places like that as well. So
yeah, okay. Thank you for that. We're definitely coming back to Greg later on in the show. But in the interest of time, I'd like to move on to our next presentation. So Greg, if you can just take down your slides.
oh, right.
That's no
Okay.
problem at all. And whilst you're doing the unshare, I'll ask our next presenter, Kerem Usenmez, to go and share his slides. Kerem, I think just to introduce Kerem, Metallum Resources is a newly listed zinc and copper focused base metal company based in Canada, which has the Superior Lake Zinc Copper flagship project. Kerem is also president and chief executive of Metallum. Kerem, the floor is yours.
Thank you. I'm really honored to be part of these great presentations. I'll try to go as fast as possible. There's lots to share. Yeah, Metallum is a zinc and copper focused base metal company, recently listed or started trading in April when we acquired this, our main asset of Superior Zinc and Copper project from Australian listed Superior Lake Resources. In April, early April. It's an old producing mine. It was mined in the 90s by Inmet, but it's exceptionally high grade zinc and copper. So our current resource is at around 2 million tons, 18% zinc in average and 1% copper with some good precious metals. No deleterious elements on metallurgy. But there's also, what's interesting is there's JORC compliant, Australian standards compliant bankable feasibility study that was done by the previous owners in 2019. We are currently in the process of updating that and converting it into Canadian standards, and it should be published early July this year. And we started drilling as well in April because they did a lot of exploration programs, and apart from the main two horizons, which I'm going to show you shortly, there are multiple targets to increase the resource because there's minimal exploration that was done. So there's also, just to mention, there's a bunch of good infrastructure. There are tailings dams, mine shaft, underground development, 16 kilometers. There's road right to the project. It's just near the town of Schreiber, 20 kilometers off of the main Trans-Canada Highway. And just 150 kilometers east of Thunder Bay, straight, there's a road straight to the mine site. And it's a typical VMS. It's an RKM, so it's same age group as Kid Creek or Flin Flon camp, and ours is one of the good ones there. So in this presentation, you can see the green areas what is mined. 2 horizons that are discovered to date. The red ones are what's the part of the known resource. There's 2 million tons, 18% zinc in average. The Winston mine remaining is 10%. Pick side is one of the higher ones, and the gray areas are the known exploration targets. So believe it or not, this area has not been drilled. Some boreholes here. So we are initially targeting those, but that's apart from that, there is also regional targets, which I'm going to show you shortly. So pick side, it goes up right to 40%. I mean, they had trouble at times processing that due to high grade of zinc that they had to dilute at times. So this is the whole area. So Pick Lake Horizon project at the surface with Anderson showing that's the area we're focusing initially. And these are all the other targets, Winston Lake projections. But these are our initial targets that we are drilling right now. But as we are looking at it, apart from these 2 horizons, We identified 2 other targets as well that we are going to go after in our second phase of exploration. So this is showing the relationship between Pick and Winston. There's the drift, and these are the tonnages, 1.8 tons, million tons at Pick Lake with 19%, but totaling at 2 million tons at 18% zinc and 1% copper and some precious metals. This is showing where we stand in relation to our peers. By far the highest average grade. Yes, the resource is relatively low, but enormous potential to grow. What's our timeline, the catalyst to watch for? So our surface current exploration program is underway. We're going to wrap up at the end of this month. Assays to come in July. Feasibility study, Canadian standards should be published at the beginning of July as well. And then we're going to plan for our next program, which should happen in the fall. While we wait for our dewatering permit, we expect to have that by the end of this year, so we can dewater in the early 2022 and start going underground. Long term is we're always evaluating other projects. And that's pretty much all I have. And yeah, looking forward to more questions so I can tell more.
Excellent. Well, let me first of all go to Michael Danov. What questions or thoughts do you have for Kerem?
Since you mentioned you have a pretty high percentage, 70% of zinc quality, so obviously if this ever gets to production, if you'd scale it to 10 million resource, so if you go back up to that slide to what your peers are, that would be interesting to see how, from a feasibility aspect, when you guys are going to redo it right now, curious what those numbers would look like when it comes there. And do you know what kind of numbers they have put out or what you could disclose at this stage? From the,
I mean, based on the based on the Australian study, the current resource with 1,000 ton production, they were, I think, estimating between 900 to 1,000 ton production per day. It had 9-year mine life. No problems in the metallurgy. Sorry.
I mean, from a cost perspective, what would it cost from a bankable feasibility?
Cost perspective, I mean, let me double check here, or if I can share this. I'm not too sure if I can share, but so the cost perspective is initial CAPEX is very low. It's the 89 million US they were predicting at the time. It was 2019 numbers. But so the cash cost, US dollar per pound of zinc is 35 cents. So, and NPV is around 115 US million. And IRR was around 27%, I believe, after tax.
Got it. What did you say was the all sustainable cash cost on the bankable?
Oh, 35 cents per pound.
35 cents per pound.
Yeah.
Got it. Okay.
There's a question posted from the audience from Razil Zisman. Who is leading your PFS study?
It's handled by DRA Global, the Canadian Ontario office, but we have a lot of QPs taken off for each category. There were 2 other firms, Canadian firms, that were participated in the JORC compliant feasibility study. They're also helping out. So it's a group effort, but DRA is the project manager for this.
Bringing in Angelos. Angelos, what kind of questions do you have for Kerem?
Thank you, Kerem. You obviously acquired the project with an existing bankable feasibility study. Perhaps the pricing of the commodities was different at the time when you negotiated the purchase. But there was a feasibility study that pointed to reasonably attractive economics. What have you done since to re-rate or upgrade the BFS that you are now planning to produce in the next month or so? And yet you are still continuing to drill, hoping to expand the resource size and the project size. So why do you upgrade the feasibility study now rather than wait until you have completed the drill program, you have assessed the entire sort of size of the resource, and then look at what you can put to production?
That's a great question, and involves a lot of things. So yes, the deal was negotiated last year. when the zinc price was still low, and then COVID hit. These guys couldn't come. They decided, they can't run it. They were looking for a partner, and then it turned into an acquisition. So we acquired this in April. In April, when we acquired it, we have the JORC compliant feasibility study. It looks amazing. We can start, opening it, but we needed the 43101 compliant feasibility study, because I cannot use any of this information publicly, because it's historic. It's considered as historic. So in the meantime, we're looking at permits. So we are fully permitted for exploration. We're permitted for a bunch of stuff, but we cannot dewater the mine because we don't have the permit in place yet for that. So we are in the queue. We were asked to do one more thing, like survey it before we can turn them into mining claims. So that is almost completed. I think this week they're wrapping that up. We expect to have that dewatering permit by the end of this year. So before we can start dewatering in the new year, we decided to do some exploration. Just to give you an idea, when we look at these two deposits, right, they drilled roughly just over actually 1,500 boreholes to define Winston Lake deposit. There has only been 247 drill holes in the Pig Lake. So this area is not well understood. Zero drilling here, zero drilling around here, none at this, even though there is good indicator on surface. The exploration potential is enormous here. When you look at these are not drilled. None of these are drilled. We see enormous potential here, here. We're not even looking at this area yet. So just alone, we are drilling right now here and some other targets. There's some good conductors here as well. But if we have some sort of good results here in July, we are going to focus on here in a relatively short amount of time. We can increase the resource by, I don't know, 15-20% more just with that area alone in the fall. So then we can update it. But there are also some other things that we need to update, the numbers and all that stuff, so I can move forward, that I can use that feasibility study to move forward. But in the meantime, yeah, a couple of things like updating the resource. Hopefully we are going to change along the way after the fall. I hope that answers your question. I mean, it involves a lot of things, but
just to clarify, you basically want to update the feasibility study to Canadian compliance so you can get all the permitting and progress the development work, so you can drill more and understand the body later, and then there will come another update of the feasibility study at a later stage, right?
Partly, yes. Yes, so we can go parallel towards opening the mine as well as do some more exploration. Already identified targets as well as more targets that we're coming up with. And if we get good results here and there, like Mark was mentioning, that based on the results we get, we're going to focus on here and there to increase the resource. Here's another thing. The current feasibility study suggests putting a decline here and go all the way into the pit zone. I mean, there's an internal shaft and all these, I think this shows better. So they're recommending to put the decline here, go all the way into pit mine, and then use these development and this internal shaft. But here's the thing, if we find more resource here, we might end up putting the portal here, get early access to ore, and then just truck it to surface or use the shaft to bring it to surface, either one, and then convey it to the mill here, where the tailings dam and all the infrastructure are. So that kind of stuff might change based on what we find with this first drilling program. That's why we wanted to drill right off the bat and move towards the opening the mine. But in order to move forward, yes, I need the Canadian compliant feasibility study.
How much would it cost, for example, to put the decline into the second ore body to the left?
Here, yeah, that's a great question. Actually, we are working with Nordman Engineering to do a trade-off study to evaluate putting a shaft here, putting a decline, and reopening the shaft. Which one makes more sense? We're doing that study at the moment.
Okay. Thank you.
Thank you for that. I'd like to ask. Oh, sorry. So was that one more question there from you, Mark?
Yeah.
Sorry.
Yeah, Kerem, from who are the nearby producers, and how's the infrastructure there currently right now on the asset? Do you have to build out roads, anything traditional or untraditional that they have to expand the production site area?
So that's a good question. So there's a tailings dam. I think I have a short list here. So yeah, there's a tailings dam, polishing ponds, and settling ponds are in place. There's transformers on site, so it's on grid. Literally, you see the power lines right go through the property, and then there's a road right to the mine as well as to the exploration areas that we're drilling, and 16 kilometers underground development. So what we will need is to place the mill, like buildings and stuff. Those were all the commissions. And one of the first things I looked at was there any ore pile left? They took everything. So we don't have any ore ready to go. But any of the buildings and stuff that we need to put in place. One of the things we will be looking at is, can we do part of the initial process underground? So there's less processing on surface, like ore sorting and stuff, which will help potentially with the processing and all the other complications from that. It's too early to say, but that's one of the things we will be looking at.
Got it. Okay. And I assume there's power and everything nearby as well.
Oh yeah, there's transformer on site on the Winston side. Yeah.
Okay. Question I'd like to ask to you, Kerem, and then I'd like to ask to our two mining guests as well. I guess the ESG and sustainability and environmental credentials are a common question that is often on the mind of many investors. Can you just tell us, I'll go to you first, Kerem, then I'll go to Greg, and then I'll go to Mark. Kerem, what are your company's ESG credentials?
Yeah, thank you. This is the thing that has been taught. So I'm originally from Turkey. I've seen what mining does to the communities, okay, on the positive side, enormous. I've experienced firsthand as I was growing up, and then when I started in the field back in Turkey, and then even in Northern Canada, as well as South America where I worked, mining has always been ESG focused, I think. It's just, we're just putting numbers or name to it, and it's more focused, which is great to see. What we are doing is since the beginning, we've been talking about this, what can we do to bring more sustainable, positive impact, not just the communities, but to the environment and all that stuff. So what we've been doing is, obviously we're doing exploration right now. Our drilling contractor is First Nations owned and operated. We're working with the First Nations, we're on a First Nations territory. It's Pace Plat territory. We are working with them. They kind of have the first right of refusal for any employment. We have their person monitoring the water, and everything we do it in terms of environment first. We have very strict rehab rules for our drill pads and everything else. And that's one of the things why we would be looking at part of the process underground to eliminate any potential risks. So that kind of stuff it's definitely the focus right now.
And just bringing in Greg Crowe from Silver One Resources, what are your company's ESG credentials?
Well, essentially, similar to what Kerem was talking about, is that we do a lot of work with the local communities. We also work well. We're in the United States, of course, with the BLM and the Nevada Department of Environmental Protection. We're at the exploration stage, so we're not as advanced with respect to carbon reporting or anything like that. But we have a committee, an ESG committee, etc. And we haven't got a lot of disclosure on our website, but we're just working on putting that up on our website. But we do believe in sustainable, environmentally best practices, and that's how we want to proceed and build our company. As I said, we've been in a lot of discussions with the BLM and the Nevada Department of Environmental Protection, and they have not had any issues with the work that we have done to date.
And then just turning to Mark from Aurelius Minerals, how would you answer that question?
I mean, I grew up in Sudbury, Ontario. I mean, in you know, the mid '90s, we won the award for regreening the community. So I grew up watching the evolution of historic practices, advance and return. And I think it's just relevant that if your greatest assets are your employees and the health, safety, and the environmental elements that, you know, they're exposed to, not just at work but within their local communities, needs to be reflected outward. So I think actually Kerem hit it well. I mean, ESG is certainly a topical term, but, you know, I've always referred to the mining industry as the, you know, as the original environmentalists, because these are communities where we live and we have to apply best practices. And, you know, because I still go to Sudbury to, you know, to holiday, and I have my summer camp. You know, I can see the smelter from my, I can see this Inco Superstack from my mom's house. So, you know, it's actually right at the top of, it's right at the top of our charts. And I know Greg and Kerem and many others will agree with us. That's what it is. We're there to enjoy the communities that we interact with. So it's a top of the chart for us.
Well, I've never been on holiday to Sudbury route before, but my but my sort of sister and her husband own like a property on the sort of like French River. So I must remember the next time, rather than going to French River, is to come a little bit further north to Sudbury. It sounds like a great place for a summer holiday, Mark.
It's about 45 minutes north of the French River, and I spend my time on the Manitoulin Island, which is a little further west and south, but there's nothing quite like Northern Ontario to enjoy some mosquitoes and black flies. Right.
And on that piece of holiday advice, I think that brings us to the end of today's show. Many thanks to our investor guests, Michael Danov and Angelos Damaskos. Many thanks to our sponsors, Metallum, Silver One Resources and Aurelius Minerals, and also to our media partners, Resource Global Network. See you at a future 5 at 5 or one of our future sessions at our online June global event. Have a good evening. Thank you very much.
Thank you.
Thanks, Andrew. Bye now.
Thank you.